The market didn't crash. It calcified. 2026 is when the ice starts to crack. For years in Greater Boston, buyers waited for sub-3% mortgages to return, while sellers clung to those same golden handcuffs. 6 and even 7% became the new reality. The stalemate hardened into a way of life. But the tone has shifted. Life events, marriages, growing families, new jobs are prying open doors that interest rates tried to seal shut. The question now isn't whether rates fall back to pandemic lows. It's how buyers compete when inventory stays scarce, and how sellers decide to move despite giving up those prized loans. The numbers frame the dilemma. In 2015, 57 cities and towns around Boston had a median single-family sale price below $500,000. By 2026, that number shrank to 3: Brockton, Halifax, and Wareham. At the top end, Brookline, Wellesley, and Weston now see median prices topping $2,000. The entry-level ladder didn't just lose a rung, it lost entire sections. At the same time, the skyline suggests abundance. Walk from Back Bay to the seaport and cranes dot the horizon. Yet those new keys being handed over are from blueprints pulled years ago. Greater Boston added more than 70,000 housing units in the last 5 years. But the pipeline for what comes next is thinning. As of July 2025, new housing permits were down 44% compared to July 2021. That is a supply cliff forming for 26 and 27. This is the causal chain in plain detail. What happened? Rates jumped and froze decisions. Why? Buyers wouldn't pay up for borrowing near 6 or 7%, and sellers wouldn't give up a 2-point-something mortgage. Who's affected? The middle class, most of all because the starter home disappeared in most of Greater Boston between 2015 and 2025. What's next? A psychological thaw as people accept the new baseline, colliding with a real, measurable shortfall in new supply. The thaw itself is visible in motion. It's visible when a basketball star departs. In Newton, an 8,850 square foot mansion changed hands on December 22, 2025 for $6,690,000 after the seller listed in October 2025. It's visible in Boston's Back Bay, where a 5-story brick house built in 1890 fetched $11,000 in December 2020, up from a $5,000, $100,000 purchase price in 2015. And it's visible in Quincy, where a 9,300 square foot home with 7 bedrooms sold in March 2025 for $4,350,000, with the buyers moving in by May. Even in the celebrity lanes, the market sends signals. In Easton, a purchase of $2,500,000 in December 2005 put a spotlight on a town better known for its commuter balance than for splashy headlines. In Weston, an 18.7-acre, 22,000 square foot compound that sought $32,000 in May 2025 trimmed its ask to $32,000 as the year wore on. And in Salem, the appeal of waterfront 2-bedroom living pulled a reality TV star from Greensboro, North Carolina, to the North Shore in the spring of 2025. These aren't everyday transactions, they're beacons. They tell you where the top end is confident, where sellers recalibrate, and where lifestyle still trumps hesitation. But the center of gravity remains numbers, not names. Look town by town at how prices moved across the Commonwealth in the 12 months ending November 2025. In Weston, the typical home value of $2,167,570 rose by $82,624, a 4.0% gain in 1 year, and an $804,519 climb over 5 years, a 59% jump. In Wellesley, the typical value of $1,932,908 increased by $67,667 year over year, up 3.6%, and by $623,339 over 5 years, up 47.6%. In Dover, $1,704,854 was the typical value, up $63,022 in 12 months, a 3.8% rise, and up $537,076 over 5 years, a 46% leap. Newton's typical home sat at $1,461,113, up $51,806 in a year, a 3.7% gain, and up $402,492 in 5 years, a 38% rise. In Lexington, the typical value of $1,520,479 was up $46,139 year over year, a 3.1% climb, and up $462,826 over 5 years, 43.8%. In Lincoln, 1,470 UNOs, $924 rose by $55,848 in 12 months, up 3.9%, and by $483,997 in 5 years, up 49%. These figures tell the Massachusetts story: stability at high levels that slowly ratchets upward, not downward, erosion of entry-level affordability, and a handful of enclaves accelerating faster than the state at large. In the coastal arc south of Boston, strength spreads beyond the trophy zip codes. In Norwell, the typical home value of $1,000 and $2,800 jumped $56,407 in a year, a 6.0% surge, with a 5-year increase of $346,475,000, 52.8%. In Scituate, it was $963,151, up $29,966 year over year, 3.2%, and up $321,717 over 5 years, 50.2%. In Hingham, $1,264,218 rose $28,161 in a year, 2.3%, and $421,040 across 5 years, 49.9%. In Duxbury, $1,057,582 climbed $33,000 in 12 months, 3.3%, and $325,885 over 5 years, 57.4%. Head north, and the pattern repeats with variations. In Manchester by the Sea, the typical home value of $1,270,207 rose $53,310 in a year, a 4.4% gain, and $443,545 over 5 years, 53.4%. In Winchester, $1,480, $7,257 was up $28,835 year over year, 2.0%, and $413,724 in 5 years, 38.5%. In Andover, $956,000, $40 million gained $28,535 in a year, 3.1%, and $36,273 over 5 years, 47.1%. In Arlington, 1031, $690, $3 added, $25,368 year over year, 2.5%, and $244,768 over 5 years, 31.1%. And note the tier just below the marquee names. Watertown's typical value of $812,810 rose $22,611 in a year, 2.9%, and $165,659 over 5 years, 25.6%. Reading's $1,878,046 increased $20,519 year over year, 2.4%, and $246,921 over 5 years, 39.1%. Belmont sat at $1,397,626, up $20,603 in 12 months, 1.5%, and $339,633 across 5 years, 32.1%. Even in smaller communities, momentum persisted. In Boxford, $1,030,736 rose $37,203 in a year, 3.7%, and $322,240 in 5 years, 45.6%. In Sherborne, a Metro West pick for buyers craving larger lots, the typical value of $1,180 to $8,919 rose $38,761 year over year, 3.4%, and $369,954 over 5 years, 45.2%. In Westwood, $1,190,500 increased $38,760 in 12 months, 3.4%, and $381,074 across 5 years, 47.1%. The Cape and Islands and the Outer Cape held their own. In Provincetown, the typical value of $1029,909 rose $22,762 in a year, 2.3%, and $354,630 in 5 years, 52.5%. On Martha's Vineyard in Chilmark, $2,000, $320,830, $2 climbed $49,811 year over year, 2.2%, and $749,747 across 5 years, 47.7%. On the South Shore, Cohasset stood at $1,366, $625, up $42,458 in a year, 3.2%, and $463,000 in 555 in 551.7%. Western Massachusetts, by contrast, delivered calm. In Springfield, the average home value sat just under $288,000, while Boston sat a little over $755,000. That spread underscores why the compass points west for relief. In Longmeadow, the typical home value was $516,166, up $23,062 in a year, a 4.7% rise, and $154,237 across 5 years, 42.6%. In Stockbridge, $707,467 increased $22,579 year over year, 3.2%, and $260,331 in 5 years, 55.7%. In Egremont, $784,164 jumped $41,260 in a year, 5.6%, and $306,639 over 5 years, 64.2%. In Mount Washington, $617,542 climbed $35,985 in a year, 6.2%, and $191,974 across 5 years, 45.1%. The core cause behind all these figures is simple: supply. The region delivered more than 70,000 units over 5 years, but that was the caboose of a train that left the station long ago. With permits down 44% as of July 2025 versus July 2021, developers signaled retreat. High borrowing costs didn't just scare buyers, they paralyzed projects. Construction costs soared, and the math on the 60-story glass tower went sideways. Landmarks like Winthrop Center and South Station Tower defined the last cycle. The next cycle pauses at the pro forma page, pencil hovering. Policy levers exist, even if they take time to pull through the system. A newly passed Affordable Homes Act opens the door for accessory dwelling units, ADUs, small secondary homes on existing lots to add trickles of inventory. But a construction surge hasn't materialized yet. Meanwhile, on the demand side, the playbook has changed. Cash offers have dipped slightly from their 2024 peaks, but down payments are rising. Families with stock market windfalls are stepping in, the bank of mom and dad, to close affordability gaps. For those without gifts or trusts, speed and certainty become weapons. Fully underwritten preapprovals, so-called power bids, let financed buyers close in as little as 2 weeks and compete with cash. Zoom out to the calendar ahead. In 2026, mortgage rates are expected to average 6.3% for the year, down from 6.6% in 2025. It's not a return to 2 point something. It's a minor but meaningful step lower. Combined with prices rising only about 1% nationally in 26, wages are positioned to outpace home price growth for the first sustained period since the aftermath of the financial crisis. That dynamic doesn't make Boston cheap. It makes the pain recede inch by inch. The national sales picture is consistent. Existing home transactions are expected to rise about 3% in 2026 to an annualized 4.2 million. A stronger spring is likely when buyers compare 6.3% mortgages against the roughly 6.8% they faced in the spring of 2025. Renters feel this too. As apartment construction slows from the 2021 to 2022 surge, fewer units are hitting the market. With more households renting because of sizable down payments and carrying costs, rents are expected to rise about 2 to 3% year over year by the end of 2026, roughly in line with inflation. Household shapes shift to adapt. As of mid-2025, roughly 6% of Americans who struggled with housing costs moved in with their parents, and another 6% moved in with roommates. More multi-generational households are renovating, more friends are pooling resources to buy together with prenup-style agreements, and homeowners sitting on equity are recalculating. With about 20% of mortgaged households carrying rates above 6%, refinances become attractive if 6.3 is within reach. Total refinance volume is expected to exceed $670 million in 26. The equity foundation is deep. The typical mortgaged homeowner had about $181,000 in untapped equity by mid-2025. That's dry powder for renovations, HELOCs, cash-out refis, and a way to expand space for in-laws, adult children, or rental units without moving. This broad backdrop folds back into Massachusetts block by block. Inside Boston, strategy is geography. In Dorchester, homes within a 15-minute walk of the Red Line, particularly from Savin Hill to Neponset, bundle beaches, parks, local restaurants, groceries, and quick commutes. That package compounds long-term value even in a tight market. In Metro West, Sherborne draws buyers with larger lots and privacy, while Medfield offers a walkable downtown and a community feel. Parts of Natick, Dedham, and Westwood stretch dollars a bit further while keeping that 20 to 35-minute drive to Boston. Central Massachusetts leans on Worcester, with improved rail service, a new ballpark, and a growing restaurant scene pulling newcomers inland. And south, the arrival of South Coast Rail has turned Fall River and New Bedford into viable commuter hubs. Now pull the lens back to the South Shore, where family-sized but accessible has morphed into competitive and rising. In Pembroke, the typical value of $642,340 rose $20,577 year over year, 3.3%, and $186,775 over 5 years, 41%. In Hanson, $591,955 climbed $20,317 in 12 months, 3.6%, and $173,282 across 5 years, 41.4%. In West Bridgewater, $577,325 increased $20 in a year, 3.9%, and $163,675 over 5 years, $30, 9.6%. The mid-tier is moving, not idling. Along the North Shore and into Essex County, the rhythm holds. In Gloucester, $743,335 rose $26,146 in a year, 3.6%, and $238,596 in 5 years, 47.3%. In Newburyport, $906,016 increased $25,983 year over year, 3.0%, and $293,860 in 5 years, 48%. In Newbury, $908,599 climbed $23,416 in 12 months, 2.6%, and $308,176 over 5 years, 51.3%. In Rowley, $776,628 rose $21,000, $226 in a year, 2.8%, and $231,816 in 5 years, 42.5%. Even in Middlesex County, where prices have long been solid, momentum is methodical. In Bedford, the typical home value of $1,953 rose $20,550 in a year, 2.1%, and $268,067 over 5 years, 36.6%. In Belmont, again, $1,397,626 added $20,603, 1.5%, with a 5-year climb of $339,633, 32.1%. In Arlington, 1031-1093 increased $25,368, 2.5%, with a 5-year gain of $244,768, $34, 1.1%. On Cape Ann and the far northeast, small towns saw steady additions. In West Newbury, $919,170 rose $119,999 in 12 months, 2.2%, and $295,866 in 5 years, 47.5%. In Merrimack, $641,036 climbed $20,844 year over year, 3.4%, and $191,536 over 5 years, 42.6%. In Topsfield, $934,277 increased $24,450 in a year, 2.7%, and $280,180 across 5 years, 42.8%. Down the South Shore and into towns like Marshfield and Scituate, the seaside premium remains clear. Marshfield's $761,509 rose $22,097 in a year, 3.0%, and $253,571 over 5 years, 49.9%. Scituate again stood at $963,151, up $29,966, 3.2%, and $321,717 over 5 years, 50.2%. In Hingham, $1,260, $4,218 added $28,161, 2.3%, and $421,044 in 5 years, 49.9%. These numbers tell us who moves first when the ice cracks. Luxury buyers treat Boston as a flight to safety. To them, real estate is a place to park liquid assets when markets swing. That appetite keeps neighborhoods like Back Bay and the Seaport stable even when cranes slow. At the same time, the middle market, families trying to buy in the $600 to $900,000 range, feels the pinch. Only 3 greater Boston communities had a median single-family sale price below $500,000 in 25. The starter home, as a category, is nearly extinct inside Route 128. So the strategies adapt. More buyers lean on parents for down payment help. Others choose speed, pre-underwriting, 2-week closes to beat out cash. And many expand the map. Dorchester near the Red Line becomes a target. Sherborne and Medfield become worth the drive. Worcester becomes a real option, not a last resort. The South Coast Rail opens Fall River and New Bedford to commuters who would not have considered those towns before trains began connecting them at scale. There's one more cost curve to watch: insurance. While not a Massachusetts-only phenomenon, the total cost of homeownership is rising nationally as premiums soar, particularly in areas facing natural disasters. Even if mortgage rates drift lower to an average of 6.3% in 2026, carried costs beyond principal and interest weigh on budgets and help explain why renters are expecting 2 to 3% rent increases by the end of the year and why households double up. The market adapts in ways spreadsheets don't always capture. Renovations pivot to multi-generational layouts. Garages become suites. Equity funds improvements, not moves. Against this backdrop, pockets of relative value persist. In Worcester County, Berlin's typical value of $647,851 rose $20,797 year over year, 3.3%, and $189,000 of a 10-year roll, up 5 years, 41.2%. Hopkinton in Middlesex County stood at $928,000, $300, up $22,205 in a year, 2.5%, and $290,212 across 5 years, 45.5%. In Watertown, again, $812,810 rose $22,611, 2.9%, and $165,659 across 5 years, 25.6%. These gains aren't frenzy. They're steady, and they speak to a state that values stability over spectacle. If you're searching near the coast north of Boston, Linfield's typical value of $1,058,731 rose $21,401 in a year, 2.1%, and $330,767 over 5 years, 45.4%. In Danvers, $708,724 increased, $20,099, 2.9%, and $185,612 in 5 years, 32 cents, 5.5%. Reading's $878,046 again moved up $20,519 in the year. These single-year increases are modest compared to the 5-year climbs, underscoring the new normal pacing. Not a spike, not a slide. Further south and just west of Plymouth, Pembroke and Hanson's trajectories, $642,340 and $591,955, with respective 1-year gains of $20,577, $317, illustrate why families who once thought starter home near Boston now say starter home near Route 3. The commute gets longer, but the trade-off is a backyard. And across the bridge, or a ferry ride away, on the islands, the ceiling keeps rising. Chilmark's $2,000, $320,000, $810,000, $2.09, $810,700 in a year. Provincetown's $1,029, up $22,767, and $2,762. These are destination markets with limited land, and their 5-year increases, $749,000, $747 and $350, $4,630 respectively, tell the longer story. Head back to the high end along Route 128 and Newton's $1,460 to $1,113, Lexington's $1,520,470, Lincoln's $1,471,924, and Winchester's $1,480 to $7,250 to $7 define the arc where school systems, green space, and proximity to Boston keep buyers in line, even as construction cranes quiet. This is where those golden handcuffs are heaviest. Many owners refinanced or bought before 22.1 and hold sub-3% loans. The decision to sell means giving up a once-in-a-generation rate, and that friction keeps active listings lean. Inside Boston, sellers are listing, buyers are bidding, and the stalemate of 2020, 6.3, and early 2024 has faded. The market swaps paralysis for pragmatism. The edge isn't size. There are still too few homes for sale. The edge is speed, cash equivalents, or creative financing backed by family balance sheets. And with the dust settling around new rules for agent commissions, the business mechanics of buying and selling are more predictable, which helps keep deals moving. For a moment, return to those celebrity moves not as gossip, but as markers. In Easton, a $2,500,000 purchase in December 2025 shows the pull of towns that balance space and access. In Quincy, a $4,350,000 buy in March 2025, followed by a May move-in, signals confidence in a city that offers coastline, transit, and new development. In Back Bay, an $11,500 sale in December 2025 against a 2015 purchase of $5,100,000 underscores how the top-end compounded value even before the pandemic boom. In Newton, a $6,690,000 sale on December 22, 2022.5 in an 10,850 square foot home shows that suburban luxury still clears at scale when sellers price to the new environment. In Weston, a listing stepping down from $30,000 to $31,500 reminds us that even at the peak, price discovery is real. If you're hunting in and around Boston now, the map of opportunity is laced through transit and access. Dorchester, within a 15-minute walk of the Red Line, Savin Hill to Neponset, places buyers near beaches, parks, and grocery stores with a straight shot downtown. In Metro West, Sherborne and Medfield reward larger lot preferences, while Natick, Dedham, and Westwood place you within a 20 to 35-minute drive of the city with more square footage per dollar. Central Mass, anchored by Worcester's rail, ballpark, and restaurants, looks less like a backup plan and more like a deliberate choice. The South Coast, newly tied to Boston by rail, vaults Fall River and New Bedford up the list for commuters willing to trade neighborhood familiarity for price and space. With that landscape in mind, what's next over the next 12 months? Base case, a slow, broad thaw. Mortgage rates average around 6.3% in 2026. Not enough to flood the market, but enough to loosen it. Prices rise, but by less than wages. Sales grow modestly, about 3% nationally to roughly 4.2 million, and Massachusetts participates in that recovery with a tilt toward condos, homes near transit, and western cities where the price gap. Springfield just under $288,000 versus Boston a little over $755,000 remains compelling. Two watch items will shape whether that base case holds. First, supply. The 44% drop in permits as of July 2025 versus July 2021 signals fewer completions in 2026 and 2027. If permitting remains depressed into mid-2026, expect new build scarcity to intensify the competition for existing homes, especially in the $600,000 to $1,000 range. ADUs, accessory dwelling units, enabled by recent legislation could help, but only if homeowners and municipalities move from permission to production. Second, financing conditions. If rates dip below 6% and hold there for any meaningful stretch, that would be a tipping point for both sides of the market. Buyers who paused at 6.8% in the spring of 2025 would return in larger numbers, while sellers who could no longer justify staying put might finally list. Conversely, if insurance premiums continue to rise quickly and inflation pressures keep rates from drifting lower, affordability gains in 22.6 could be muted. That risk would push more households to rent longer, lining up with expected 2 to 3% rent growth by year-end, and reinforcing multi-generational living and roommate arrangements. Through it all, the calculus in Massachusetts remains grounded in real places with real numbers. Weston at $2,000, $167,570, up 4.0% year over year. Wellesley at $1,932, $908, up 3.6%. Dover at $1,704,854, up 3.8%. Newton at $1,460, up 3.7%, up 3.7%. Lexington at $1,520,479, up 3.1%. Lincoln at $1,470 to $1,924, up 3.9%. Norwell at $2,800, up 6.0%. Duxbury at $1,580, up 3.3%. Hingham at $1,264,218, up 2.3%. Situate at $963,151, up 3.2%. Provincetown at $1,299, up 2.3%. Chilmart at $320,832, up 2.2%. Arlington at $1031,693, up 2.5%. Belmont at $1,397,626, up 1.5, and the quieter set. Longmeadow at $516,166, up 4.7%. Egremont at $784,164, up 5.6%. Mount Washington at $617,542, up 6.2%. Those numbers, stacked end to end, define the Commonwealth's new normal. They tell us that Massachusetts didn't chase bubbles, it cemented floors. They tell us that construction headlines from Back Bay to the seaport mask a coming shortfall, because as of July 2025, permitting stood 44% below July 2021. They tell us that a 40-minute commuter rail ride can be the difference between $288,000 in Springfield and a little over $755,000 in Boston. They tell us that even as cash offers recede from their 2024 highs, down payments climb, parents gift, and two-week closes level the playing field. In a world of swinging markets, Massachusetts real estate has been the calm eye of the storm. Stability protected values while it punished newcomers. 2026 offers a way forward, not a way back. Expect a long reset, not a quick correction. Expect sales volume to rise slowly, prices to normalize gradually, and affordability to improve as wages outpace costs. Expect the high end to remain confident, the middle to stay competitive, and the western and southern edges of the map to welcome new names on mailboxes. If you're buying, bring certainty, speed, and a map that includes Dorchester, near the Red Line, Worcester's rail-connected neighborhoods, and South Coast towns newly on the grid. If you're selling, price to the new normal and plan for buyers who can close in 2 weeks. If you're holding, consider equity as a tool. $181,000 was the typical untapped amount for mortgaged owners by mid-2025 to shape homes for multi-generational living or income spaces. And if you're building, watch permits, costs, and local ADU rules. The demand is there, but the math must pencil. The ice is cracking. The sound you hear isn't collapse, it's movement. The stalemate yields to motion, measured, uneven, but real, across Boston, Cambridge, Quincy, Newton, the South Shore, the Cape, the Berkshires, and beyond. The next chapter will not be about chasing rates back to 2-point-something. It will be about living in a world where 6 is normal, $1,000 isn't unusual in the suburbs, $280,000 still buys in Springfield, and the difference between winning and losing is sometimes a fully underwritten pre-approval that lands you in a new home 2 weeks after an offer. Base case, again, a slow thaw through December 2026. Sales up a bit, prices up a bit, wages up more. 2 risks to watch. The permit pipeline down 40% as of July 2025, and whether ADUs scale beyond paper, and the rate path, 6.3% on average, is the glide path, but a durable break below 6% would be a jolt while insurance and other carrying costs tug the other way. Those are the levers that will decide whether Massachusetts ends 2026 with more breathing room or more pressure in the same places. Make your moves with numbers, not noise. And if this helped you see where the map is shifting, share it with someone plotting their next step in Massachusetts.